Hello everybody, my name is Devin Jones. I'm coming to you here from Macdonald Financial Services. I wanted to just give you an update of what we saw happen last week, not only in the markets, but just I guess around the world really, because we had some news come out over the last week that was fairly significant. So anyway, let's start with wishing the bull market a happy anniversary. We just surpassed our third year of this bull market, so we're now into our fourth. Typically, when you go into a fourth year of a bull market, it tends to lead to a fifth. So we are expecting things to continue to look pretty good in the markets. We've seen some volatility last week, and I guess it come on the heels of the prior Friday, where we had some tensions again kind of pop up over the U.S. and China trade deal. President Trump was going to levy a 100% tariff on goods coming in from China. And I think, we're now kind of getting closer to the expiration of the moratorium that they had put on with the escalating trade talks. That settles on November 10th. So I think in 2 weeks, I think Trump said on Friday, he's still expecting to meet with President Xi, and we'll kind of see how things go there. As negotiations tend to go, they're going to start slinging mud at each other, I would guess, and we'll just kind of have to see how things shake out. But it has roiled the markets a little bit. So Friday we did see across the board between a 2 and 4% decline in most of the indexes. That was fairly significant. Obviously, we hadn't seen that type of volatility in quite some time. Last week we did see, for the most part, at least as we're shooting this now, things seem to have settled down. There was volatility, of course, but just above the flat line really is where the index is settled in. So anyway, so we're fresh off of the third quarter ending. We're now into the fourth quarter, so we are now starting to see some of the numbers come in. Fourth quarter numbers started to drop last week. Banks, regional banks, big banks were the first to release their earnings. For the most part across the board, they look pretty good. Top line numbers look really good. There is some concern. Banks like Zions Bank, for example, came in with a $60 million write-off. You kind of peel back the onion on that. Most of the time, the leading headline will be that we've had defaults on loans. Yes, they did have some defaults. However, they said that a big part of that $60 million write-off was fraudulent. So JP Morgan came out with their earnings report and said, yes, they've had some loans default also, but they also saw a huge write-off from fraudulent activity. So, the scammers continue to take advantage of not only individuals, which is horrible, but also institutions. It's just kind of the sign of the times. Unfortunately, you kind of have to kind of peel back the onion and see, all right, are the numbers that we're seeing from these banks as far as the write-offs, where's it coming from? And it's not just from loans. So anyway, on to other news. We do have a peace deal in the Middle East for now. We've had prisoners released. We've had hostages released. So we'll see. We're keeping our fingers crossed that peace deal does hold. And we're obviously hoping for peace there. Let's see, what else did we have on our list here? The Federal Reserve is set to meet this month. Again, and we've mentioned it in prior videos, they're going to be flying blind with this because, again, as we're shooting this, government continues to be shut down. This is now, going into the third longest shutdown that we've seen. So it doesn't appear that there's any interest really in any sort of deal getting done. They did have a vote on Friday, I believe, and that went nowhere, didn't pass. So they're still at a stalemate. Nothing's getting done there. But what that means is the Federal Reserve is not going to get their information on jobs, and that's one of the mandates that they're working on right now. That's why they lowered rates last month. That's why they're expected to lower rates this month, is because of the weakening job front. And they're going to have to rely on ADP jobs, job numbers, to give them the information that they're looking for. I'm betting that they'll continue to cut. Would it completely surprise me if they didn't? No. But we expect that they will cut again this month. I believe they meet in either next week or the week after. And then in December, again, we expect another rate cut there. So that should help. The markets are expecting it. So we're hoping that continues. Gold, again, hit all-time highs again, up over 4,300. this week, so it just continues to climb. Then I guess lastly, sports related, Penn State fired their coach and had a $49 million write-off to buy his contract out. So he was there a short amount of time. He had a 10-year contract, so he's now gone. So as these NIL deals continue to drop and schools have very high expectation on winning, they have a very short fuse as far as putting up with losses, and obviously Penn State is moving on from their coach. So anyway, we just found that interesting that a college's institution is willing to write off $49 million for wins. So anyway, that's what we had this week. AJ, obviously, as you see here, is not with me today. He's on location. I should have mentioned that prior to, but he'll be back hopefully in the near future for another video. So thank you for watching, and we'll talk to you again next week.